Okay, folks, welcome back to Pete's Investing. It's another day for silver, gold, Bitcoin, and the US dollar for an update. It's the 12th of July. So you can see there gold and silver have risen slightly since our last update. Bitcoin has moved sideways and the US dollar has dropped slightly. This is our heat map. And before we go any further, make sure you hit that like and subscribe button, hit that notification bell, and also look at our Patreon page, links in the description below, where we do weekly scans of stocks and bullish and bearish stocks. So here we've got the heat map. We look at the CCI 150 for bullish or bearish momentum. And you can see here in the middle table here, you've got gold, silver, US dollar, and Bitcoin. It's predominantly bullish on the monthly trends and a bit of a mixed signal on the weekly. And we've got bullish movement on the gold and silver on the daily and bearish on US dollar and Bitcoin on the daily. In terms of trading strategy, we look at the higher time frames in terms of the direction we trade. So if you're trading on the daily, for example, you trade on the direction of the weekly CCI 150. And if you're trading on the intraday, like the 1 hour, 2 hour, you trade on the daily trend. And we take positions when the CCI 150 breaks out from the moving averages, and we close positions when the CCI 150 or the price moves back into the moving average range. And I'll go through some examples to demonstrate those. So looking at gold first off, on the monthly, we've broken above the moving average range of the CCI 150. And these indicators, by the way, these moving averages are both the price chart and also the CCI moving averages. They're in the description below should you wish to learn how to, there's a video there to learn how to program it yourself. But you can see there it's bullish at the moment. It's above the moving averages on the monthly. It's broken down just into the neutral range after being bearish for a number of weeks on the weekly time frame. And on the daily, it's broken above the moving averages, even though that moving average range is very thin. It's broken above, and it's been bullish now for a number of days. Notice also it's hit on the daily here. It's hit this minor resistance at 24.24 and there's also this major resistance up here at 24.50, and it's actually bouncing down from there. So we may see a bit of a retrace to the downside. But having said that, we only trade in the direction of the higher time frame. So if you're trading on the daily, for example, we only take bearish trades. So during those weeks there, you would have taken these bearish positions, while the daily was also bearish during those little drops. And I've indicated those with some red arrows for our potential entries. On the 1 hour time frame, again using the daily as a reference, we only take long trades at the moment. You can see there the daily is still bullish, and that would have been from the 3rd of July, so from that period there. Now you'll notice we only take long trades, so those blue arrows indicated long positions, but notice it's very limited because we've got this, we had this bearish divergence on the CCI versus bullish movement on the price chart. That's a bearish divergence, and the price fell back and hit our target area. And that target area marked by that rectangle is basically the Fibonacci level of the 23 to the 38% Fibonacci range as indicated there. So that's a minimum retrace. Sometimes it drops a lot further, but generally at the very least it hits that over 90% of the time before making any further movement up, either up or down. Now, where we are at the moment, let me just get rid of that. The price has made further upswing. So again, being bullish on the daily, you would have taken that long position, and you would have closed out your position near the top there, where the CCI broke into that moving average range. And at the moment, you'd be in no trade because the prices, the CCI has fallen below the moving averages on the 1 hour, but the daily is still bullish, so taking no trades at the moment. So silver is looking bullish also on the monthly. On the weekly, the fresh breakout on the bullish movement. So the weekly is bullish as well after being bearish for a number of weeks there within that range. And on the daily, it's a fresh breakout on the bullish side, but very weak. Notice how we had a bearish divergence back here on the CCI versus high highs on the price, similar to gold. Hit our target area, and that was a 38% level. Made a bounce, actually dropped just at the 38% level, made a bounce, and now it's still in the bullish range as well. So bullish trades only in line with the weekly on the daily time frame. Now, if you're trading on the hourly or the intraday, again using the daily as a reference, taking only bullish trades from the 3rd of July. From back here, you would have taken long trades only. Remember, we had a bearish divergence here. We don't take any long trades during that period. That would have been your first opportunity, indicated by that blue arrow. And again, closing it out when the CCI breaks into that moving average range, and it would have been near the top there, so you would have made a few pips there. I don't trade these divergence, by the way. I use them as a potential exit area if I see if I'm going long, for example, and I see this. Just be very careful about taking long trades or taking your profits off the table if you are in profit. And here we had a couple of small little breaks, but notice the CCI is pretty much moving sideways, so is the price. So they would have been pretty much break even or very small losses. And the latest one would have been at that bar there, but again, you would have probably made a small loss with retrace back there. So again, only take long trades in a direction, in this case, with the in the direction of the trend of the daily time frame. So the US dollar is bullish on the monthly, but notice it's very narrow, that moving average range of the CCI, and we may see it break into the neutral range eventually, or even bearish in the coming days or weeks. Now we did have a you can see there we do have this bearish divergence, a long-term bearish divergence on the CCI versus higher highs on the price, and that's already hit our target area. You can see there without drawing the rectangle to 23.38% level. So it came down pretty quick after hitting that peak previously. Now on the weekly, we're bearish. The CCI is broken below the moving average range, so only short trades to be taken on the daily time frame, and the daily is also showing bearish momentum at the moment. So you would not have taken, so during that period you would not have taken, actually no, you would have, that would have been a bullish movement back there during this period on the daily. The daily is also showing bearish movement. So if we go to the 1 hour chart, again using the daily as a reference, we only take short trades, and that would have been from the 3rd of July, which happened to be from this point here. So you might have got in a bit late, but that would have been still profitable. But notice we did have a bullish divergence here, higher lows versus lower lows, and in this case you would have taken short trades only. Now in this case, no short trades until this point there, as it marked by those red arrows. Taking short trade, and then you would still be in the, actually you would have closed out your position after it hit that moving average range. So that would have been a nice little trade to take, short position there. You would have taken that and closed out your position on that candle there because that broke into the moving average range. At the moment, you would not be in any trade because this is actually starting to break into the upside on the 1 hour chart, but the daily is still bearish. Now what I'm showing you here on the 1 hour chart, by the way, is also applicable to any other intraday, say the 4 hour, the 2 hours, 15 minute, etc. Lastly, looking at Bitcoin, that's hit this peak up there at around 7,200. Now it's pulled back since then. It's actually in our moving average range of the CCI, so it's in a neutral positioning on the monthly. On the weekly, it's actually bearish. It's been that way for a number of weeks now. So only bearish trade should be taken on the daily if you're trading on the daily time frame. And on the daily, you would have had some nice bearish movement to the downside during this period on the weekly, when the weekly was showing bearish movement. Now notice here it's hit this key support at 56,566. And it's bounced off it for a number of days now and still having trouble breaking through it. But notice the CCI is still dropping further. So we might see it break below this support in the coming days. Now again, going to the 1 hour chart, if you're trading on the intraday, taking only short trades during this period, that would have been beginning from the 11th of June. So let's go back to the 11th of June. So that would have been from back here. You would have had a few trades to take in accordance with these red arrows. A few small ones there, a nice big one there. Couple of small ones there, another big one there. Each of these you would have closed it out when the CCI preferably breaks into that moving average range, and that's marked by these arrows, and then another couple of short trades there, another short trade there, and so on. So at the moment it's still in a short trade according to the daily time frame, and this one is still in an open position. Had you gone short during that candle there, you'd still be in a short positioning there. So hopefully you got something out of the positive out of the video. Hit that like and subscribe button. Don't forget the Patreon page where we look at weekly and shares of bullish and bearish shares. Thanks for watching, and see you in a future video.